I am Dr. S. Nithya, Head Department of Commerce, Madurai Sivagasi Nadar Pioneer Meenakshi Women's College, Puvandi. Now I am going to talking about some information of final accounts of companies. We discuss the following content of the topic: meaning, objectives of final accounts, components of final accounts, format of final accounts of companies, managerial remuneration. First, we discuss about meaning of final accounts of companies. Final accounts are the accounts which are prepared at the end of accounting period. It gives clear idea about the current financial position of the company or business or enterprise, the information given to owner or management or other interested parties. The financial statements are generally recorded for the purpose of preparation of journal, and then it will be transferred into preparation of ledger, and thereafter final accounts is prepared. The Companies Act require every company must to prepare every year profit and loss account or income or expenditure account and balance sheet at the end of accounting financial period. Next, we discuss about objectives of final accounts. Final accounts are prepared with the following objectives. With the help of preparation of final accounts, you can easily find out profit or loss incurred by the company for the given accounting period. It is easy to find out, determine whether the financial position of the company. With the help of preparation of final accounts, you can easily act as sources of information to convey the user of accounting information. What is the total current cash inflow, cash outflow of the company? Is the information given to owner or creditor or investor or other stakeholder about the current situation of the company? That is, what is the solvency or insolvency position of the company? Easily find out with the help of preparation of final accounts. Next, we discuss about components of final accounts. Normally, the final accounts have the following components that are trading account, profit and loss account, profit and loss appropriation account, balance sheet. We discuss the component one by one. First, we discuss about trading account. Trading account is the first part of the final accounts of the company. Trading account represent gross profit or gross loss of the concern out of sale or sales and purchase for the particular accounting period. Normally, trading activities are related to buying and selling activities involved in the business. The trading accounts give the details of total sales, total purchase, and direct expenses relating to purchase and sales. Next, we discuss about format of trading account. And normally in the trading account debit side, the following items were posted: opening stock, purchase return, all direct expenses. Direct expenses include wages, carriage inward, fuel. Trading account credit side, the following items were normally occurred: sales return, closing stock. Gross profit or gross loss occur. Gross profit and gross loss is nothing but it is a difference between direct income and direct expenditure. If the income amount is exceed, the gross profit will occur. If the expenses amount will increase, gross loss will occur. Next, we discuss about profit and loss account. Profit and loss account is also one of the component of final accounts. Profit and loss account represent gross profit or gross loss that will be transferred from trading account. The profit and loss account show the annual net profit or annual net loss of the business, that is called profit and loss account. Normally, profit and loss accounts are prepared to determine the company net profit or net loss of the trader. The debit side of profit and loss account is normally occur the all indirect expenses of the incurred by the firm or normally appear in the debit side of the profit and loss account. For example, administrative expenses, rent, salary, discount, commission, bad debt, depreciation, selling and distribution expenses, all the indirect expenses were occur debit side of the profit and loss account. All the revenue income were occur credit side of the profit and loss account. The balancing figure of profit and loss account represent the true of net profit and earned at the end of accounting period, and it automatically transferred to profit and loss appropriation account, and that will be transferred into balance sheet. Next, we discuss about what are the items posted in debit and credit side of the profit and loss account. Profit and loss account debit side, if gross loss will occur, the gross loss is transferred from trading account, it will be posted. All indirect expenses, we already discussed, all the indirect expenses were occur debit side of the profit and loss account. On the profit and loss account credit side, we discuss about what are the item posted. Gross profit, if the gross profit will occur, it will be transferred from trading account. All indirect revenues were posted in the credit side of the profit and loss account. Next, we discuss about format of profit and loss account. And the debit side of the profit and loss account, the following items were occurred: to salary, rent, discount allowed, commission, bad up, depreciation, selling and distribution, advertising, all the indirect expenses will occur debit side of the profit and loss account. Next, we discuss about what are the item posted in credit side of profit and loss account. All revenue income were posted in credit side of profit and loss account. If gross profit will occur, it automatically posted. Then income received, commission received, rent received, all the revenue income were posted credit side of the profit and loss account. Next, we discuss about profit and loss appropriation account. Profit and loss appropriation is also one of the part of final accounts of the company. It is profit and loss appropriation is normally different from preparation of profit and loss appropriation of the partnership firm. When a company makes its profit and loss account, that the net profit is automatically transferred the credit side of the profit and loss appropriation account. Profit and loss appropriation is nothing but it is an extension of profit and loss account. Normally in this account credited with the amount of net profit and debited with the amount of net loss. Amount of net profit and net loss is nothing but it is a difference between indirect income and expenditure. If the income will increase, then we will get net profit. If the expenses will increase, we get the net loss of the company. Next, we discuss about what are the item posted in debit side and credit side of the profit and loss appropriation. First, we discuss about what are the item posted in debit side of the profit and loss appropriation. Interim dividend, proposed dividend, transfer to reserve, loss of profit and loss account. Next, we discuss about what are the item posted in credit side of profit and loss appropriation account. And the balance brought forward for the last year, profit from profit and loss account. Next, we discuss about the format of profit and loss appropriation. We already discussed the following items were posted in debit side of the profit and loss appropriation account. Interim dividend, all kind of dividend, proposed dividend, any to transfer any kind of reserve, sinking fund, reserve fund by profit and loss appropriation account for the year ended. All the accounts were posted in debit side of profit and loss appropriation account. And then next we discuss about what are the item credited but to be posted in profit and loss appropriation account by balance brought down, that is the balance of previous year, by profit and loss, that is net profit of current year, by provision for the taxation, if any excess amount adjusted and the amount given in the problem, it will be posted in credit side of the profit and loss appropriation account. Next we discuss about balance sheet. Balance sheet is nothing but it reflects the current financial position of the company for the specific accounting period. The balance sheet is prepared by tabulating the total asset, that is fixed asset and current asset, and the total liability. The liability include long-term liability and current liability on a specific period. Next we discuss about format of balance sheet. According to the Companies Act 2013, the balance sheet should be modified. Now we discuss about the modified balance sheet. First, we discuss about the liabilities. Liabilities are under the heads of equity and liability. Under the equity and liability, they were categorized into three heads: shareholder fund, non-current liability, current liability. First, we discuss about shareholder fund. Under the shareholder fund, we have the following item: share capital, note number 1; reserve and surplus, note number 2; money received against share warrant, note number 3. Next, we discuss about non-current liability. Under the non-current liability, we have the following items: long-term borrowing, note number 4; deferred tax liability, note number 5; other long-term liability, note number 6; long-term provision, note number 7. Next, we discuss about current liability. Under the current liabilities, the following items were posted: short-term borrowing, note number 8; trade payable, bill payable, creditor were under note number 9. Other current liabilities were posted in note number 10. Short-term provision were posted in note number 11. Then finally, you have to posted all the item in liability side. Then we have finally put down the total from individually from shareholder fund, non-current liability and current liability. Finally, and all the three amounted were added, A plus B plus C. The final total amount is called total current liability of the particular concern. Next, we discuss about asset. The asset were categorized into classified into two category: non-current asset, current asset. Under the non-current asset, it can be classified into fixed asset, non-current investment, deferred tax asset, long-term loans and advances, other non-current asset. We discuss one by one. Under the non-current asset, we have the following item: fixed asset. Under the fixed asset, we have fixed asset are classified into examples of fixed assets are land and building, plant and machinery. Then tangible asset, intangible asset. Tangible assets are note down under the number of 12. Intangible asset, copyright, patents under the heads of under the heads of note number 13. Capital work in progress under the note number 14. Intangible asset under the development, note number 15. Then next, we discuss about non-current investment, note number 16. Deferred tax asset, note number 17. Long-term loans and advances, note number 18. Other non-current asset, note number 19. Next, the head is current asset. Under the current asset, the following items were discussed: current investment, note number 20. Inventories, note number 21. Trade receivable, note number 22. Cash and cash equivalent, note number 23. Short-term loans and advances, note number 24. Other current asset, note number 25. Finally, we total it the non-current asset and current asset. Finally, add the non-current asset and current asset. We got the total asset value. Finally, total current asset and total current asset and current non-current asset were total. Finally, we have equal amount of liability and total asset amount. Next, we discuss about the various terms used in final accounts of company. First, we discuss about dividend. Dividend is nothing but it is given to shareholder out of share or it is distributed to the shareholder out of profit or reserve. So dividend is nothing but it is given to shareholder out of profit or reserve, given to the distributed to the shareholder of the company. Next, we discuss about interim dividend. Interim dividend is one which is declared paid by the company in between two final dividend. Once in a year, it gives 6 months once. It given twice in a year. Next, we discuss about divisible profit. Divisible profit is available for, normally profit is available for dividend to the shareholder are known as divisible profit. Profit or portion of the profit that can be legally distributed as dividend to the shareholder of the company is known as divisible profit. Next, we discuss about managerial remuneration. As per the Companies Act 2013, the total remuneration paid by the company should not exceed 11% of the net profit of the company. Normally, the remuneration given to the given to the manager, certain limit were prescribed by the Companies Act. If the full-time director, part-time director or manager 5% level given to the company, but all the amount, the commission rate will not exceed 11% of the net profit of the company. The remuneration paid by the manager should be approved by the shareholder of the company and disclosed in the annual report of the company. Next, we discuss about problem relating to calculation of managerial remuneration. I read out the problem. From the following particular, determine the maximum remuneration available to the full-time director of the manufacturing company. The profit and loss account of the company show a net profit of rupees 40 lakhs after taking into account the following item. Depreciation, including special depreciation of rupees 40,000. The total depreciation amount is 1 lakh. Provision for income tax rupees 2 lakh. Donation to political party rupees 50,000. Ex gratia payment to worker rupees 10,000. Capital profit on sale of asset rupees 15,000. Once again read the problem. From the following particulars, determine the maximum remuneration available to the full-time director of the manufacturing company. The profit and loss account of the company show a net profit of rupees 40 lakh after taking into account the following item. Depreciation, including special depreciation, rupees 40,000. The total depreciation amount is rupees 1 lakh. Provision for income tax rupees 2 lakh. Donation to political party rupees 50,000. Ex gratia payment to the worker is rupees 10,000. Capital profit on sale of asset rupees 15,000. Next, we discuss about statement of for the calculation of statement of profit for the purpose of managerial remuneration. First, we have to divide 3 columns. Head under the heads of particular inner amount. Inner column and outer column amount can be classified. First, for the calculation of profit for the purpose of managerial remuneration, the formula of calculation of managerial remuneration is net profit add inadmissible item less admissible item. Once again, I repeated to the formula. For the calculation of profit for the purpose of calculation of managerial remuneration, net profit as per profit and loss account, add inadmissible item, add admissible item. In this case, for the net profit given in the problem is rupees 40 lakhs. Among the 40 lakh, you have to add all the inadmissible item. Inadmissible item in the depreciation, only the special depreciation amount will taken into the account. Total amount will not taken, and donation to the political party will not taken into the account. So you have to add other inadmissible inadmissible item in the accounts. Special depreciation given in the problem rupees 40,000. Provision for income tax given in the problem rupees 2 lakh. Ex gratia payment to the worker 10,000. You have add all the inadmissible item. The total amount we get rupees 2 lakh 50,000. You have to add net profit, add inadmissible item. The totally we got 42 lakh 50,000. Then next we have to deduct admissible item given in the problem. In this problem, admissible item is capital profit on sale of asset rupees 15,000. Among 42 lakh 50,000, we deduct rupees 15,000. Finally, we got 42 lakh 35,000. That is the net profit for calculation of managerial remuneration. So the formula for managerial remuneration is nothing but net profit add inadmissible item less admissible item. In this sum, we got the remuneration for managerial remuneration is rupees 42 lakh 35,000. Next we have to calculate commission to full-time director. The commission to full-time director at maximum level 5% is permitted by law. We already find out net profit for managerial remuneration rupees 42 lakh 35,000. Therefore, we have to calculate managerial remuneration to full-time director. The formula for managerial remuneration to full-time director is net profit for managerial remuneration in percentage of commission permittable by law. Managerial remuneration, we already calculated rupees 42,35,000. Commission rate is 5%. Therefore, managerial remuneration to full-time director is 42,35,000 into 5%. Finally, we got the amount of 2,11,750. That amount is managed. So, therefore, managerial remuneration to full-time director is 2,11,750. Once again, I recall, final accounts is nothing but the company to run the company for easily to find any other company to find out the current financial position with the help of preparation of final account. If the company, what is the current status of the company? If the company run in the long run, every company needed the current status of the business. So with the help of preparation of final accounts, every company can easily find out what is the current status and current position of the business. Thank you.